I have Annie Dickerson on here for another episode of the Raising Money Minute. Visit us at raisingmoneyminute.com. How are you doing today, Annie?
I'm awesome. Ready to rock, Ruben.
What's up? Yeah, me too. I'm really excited. It's a fun day. I've recorded like 2 podcasts and I have another one after this. So
Wow.
we're going crazy, but it's a lot of fun. I love this show. Specifically this segment, I'm having a blast with it. So today we're going to
Me
be
too.
talking about a really cool topic, something that I've personally had paradigm shifts about, which is whether you should raise capital before you have the deal or after you have the deal.
This is something that I've seen so many people struggle with, and especially newer syndicators fall into this trap all the time. Because if you look across all of the gurus in this space, they're all focusing on teaching you how to find the deal, how to underwrite the deal, and how to get it under contract, right? And so most new syndicators who get into this space, they think, okay, well, that's step one, right? Either I sign up with a mentor or I go through it on my own, but I got to find the deal first. And so they spend all this time, these poor people who are a lot of them working full-time jobs and doing this on the side, right? They spend all this time looking at deals and talking to brokers and doing all this underwriting. Some people underwrite 10 deals a week, 20 deals a week. Finally, they find that gem, right? They're like, oh my gosh, finally, I got the right market. I got the right deal, the right asset class, and it ticks all of the boxes. The underwriting is amazing. This has so much buffer, and I've got a backup plan. They've got all of the things in alignment. So they put in the LOI, they get it under contract. And they're like, yes, I got this thing under contract. I followed all the steps. I did it. Now is where the struggle comes. Now they think, wait, so now I need to raise the money. And they're like, wait, okay, so what do I do to raise the money, right? And sometimes they're raising as much as $1 million or more from scratch. And so they're like, okay, well, I've done all of this work to find the deal. I've got a great deal. Surely if I just show people the incredible returns that they're going to get on their money, people will flock to me. Everybody will sign up to invest with me, right? So this is the belief. And so then they go out, they create this beautiful deck. They go out and they start talking to friends and family. And they're like, look at this amazing deal. Look, you can get like 10% returns, 20% returns on your money, right? And mind you, this is probably the first time that they've ever talked to these friends and family about their real estate investing, or that they're doing these deals or looking at these markets or these asset classes. And so what happens, right? We've seen this time and time again. They have this deal under contract, this great deal they've been working on for months and months. The clock is ticking, right? They're getting closer and closer to the closing date. And their friends and family, their colleagues, they've tapped everyone, and nobody or very few people are ready to invest. And Ruben, you've talked about this before, how it takes multiple touches with people before they actually take action. On average, it takes 12 touches before somebody will actually take action with you or invest with you or buy your product or whatever it is. And so for those people who are trying to raise capital from scratch after they have the deal under contract, it's often too late.
It's a very scary place to find yourself. I mean, so Bakerson, we found ourselves in that situation. We came up from wholesaling houses to wholesaling multifamily to syndicating multifamily, and we had some capital sources. I think there's a myth in real estate where if you have a great deal, the money will come, right? I've heard it many, many times. And I think in maybe certain aspects of real estate, you can actually do that. Like in wholesaling a house, or maybe $100,000 raise is probably not too crazy of a challenge if you have a network, right? For the people, which a lot of people do, go through the single family phase and then move into multifamily, they think that they can take some of those old capital raising methods from that arena and apply them in syndication, and that's not the case. So I've had a ton of paradigm shifts since I've started the show, because that's how I used to raise money, and it was effective. You know, when we were raising for fourplexes or 12 plexes, it wasn't that crazy. We could raise a couple $100,000 and take down a few units. But if you don't have a ton of sources for money, then it can become very challenging to raise the capital. Unless you're like a football player that's got like all these rich friends, then like I've heard, yeah, well, we didn't have that hard of a time raising money for this syndication. And I'm like, okay, well, not everybody's a football player that's got a bunch of millionaire friends. For somebody that's maybe a smaller operator or doesn't have that network established, that definitely can be a precarious situation to find yourself in, thinking, oh yeah, I'll just raise the capital after I find the deal.
Mm-hmm.
So one of
Mm-hmm.
the things that I learned on this show was from a gentleman that's out of New Jersey named Jason Urussi. And he's like, he's been approached by people with like 2 or 3 weeks left before closing. Hey, I need a couple $1 million to finalize this. And he's like, that's a tough situation to be in. Like, that sucks. And he said, okay, so he broke it down this way, and maybe you'll agree or disagree or have some light to shed on this. He said that there's 4 steps to raising capital. 1, you explain who you are, get people to know, like, and trust you. And then number 2, you explain why. This is a big piece. Why multifamily? Because if you're going to somebody, like I heard Hunter Thompson talking about it, he went to a big accredited investor meetup and pitched this, I believe it was a mobile home park. And there was like $30 million in the room, but they were not familiar with mobile homes. And it didn't matter if they had all the money in the world. If they can't resonate with mobile homes, if you're selling a milk farm, it doesn't matter if you're getting 50% returns. If the investor can't imagine themselves investing in cows, it doesn't matter, right? So
Right.
you want to establish a group of people, an investor network, a database of people that, number 1, know, like, and trust you. Number 2, understand why multifamily. What are the inherent benefits? What are the tax benefits? The diversification, the having all of the properties in one roof so that you don't have to property manage a bunch of houses, all of those benefits. And then step 3 is to explain what the return structure looks like. So if you invest with us, this is what the communication is going to look like. This is when you can get your distributions, and this is how much we expect you to get. And here's our track record showing that we've done that in the past. And then you do those 3 steps before you present the deal. Is this your experience?
Oh, yes. And if you turn it on its head, right, and think about the investor journey, because that's what I always like to do, is think about those 4 steps right there that you just talked about. Think about that from the investor standpoint, right? If I'm an investor that knows nothing about multifamily syndication, you approach me, my first question is going to be, who are you? Who are you, and what do you
Right.
stand for, and what do you do? So that was the first step, right? Tell them who you are and more about you, your character, all of that stuff. So that's the first step. The second thing, I'm like, okay, now I know who you are. How can you help me? So that speaks to the multifamily piece. Then you start to tell me about multifamily and why it's such a great asset class and how it can help me grow my capital. So I'm like, okay, I got it. So this is who this is. This is what they can help me with. Okay, but what does this look like, right? So that's where the potential return structure comes in. And this is where we always tell people to share a sample deal to walk through the process and the potential return. So now at this point, after step 3, now as an investor, I'm at a point where I'm like, okay, I get how it works. I trust this person. I know what returns I would get. Okay, now I'm ready for that deal. And so then, like you said, that after you've gotten through step 3, that's when you go out and look for the deal. And it makes such a huge difference as well to you as an operator, as a syndicator. Think about this, right? Like as a newbie syndicator, you go out and talk to brokers. If you have no idea how much cash you can bring to the table, that's a very dangerous place to be in, because you could be looking at deals that are $500,000 or $5 million, and you have no idea if you can bring those deals down. Versus if you go out and do the work, those steps that you mentioned, and you get the investors and you get those soft commitments from people. This person can put in 50K, this person wants to put in 100. Now, all of a sudden, you go back to the broker, you talk to the broker, and you know in the back of your mind, you can bring $500,000 to the table. That completely changes the whole dynamic.
Yeah, there's one other aspect of it that, from a marketing perspective, everything that we just said makes perfect sense. There's one other part to it, though, which is finding out what the investor's problem is, right? Probing and asking questions, because you don't want to be shoving a solution down somebody's throat when you don't even know what it is that they need solving. So that's another perspective. Somebody told me, like, when I shared those 4 steps, they're like, I hear a lot of me, 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 me. Where's the, you? And you even mentioned it on
Hmm.
a previous episode that you is like the most powerful word that you can do in a marketing message. So let's go into that too. So at what step do you find out? I guess that would be in the know, like, and trust phase of this particular marketing model. When you get in contact with them, you get them to know, like, and trust you, but you're also finding out what is it that they're looking to accomplish, right? What are the
Hmm.
questions that you ask when you first get in front of an investor, Annie?
That is so important. And we start that process even before we make contact with the investors. You'll see peppered all throughout our communications, our website, any emails, we're always talking about the potential pain points that an investor might have and how we can help them with that. Because we want to attract those people who have those specific pain points and want to reach those specific goals. Because honestly, passive investing in syndications is not right for everyone.
True.
So we want to weed those people out early on so they can go on. If a flip is better for them, or a small multifamily is better for them, or wholesaling is better for them, we want to sort of weed those people out. We don't want to make it seem like syndications is the perfect fit for everyone. And then when we hop on the call with them, that is one of our main questions is, why are you interested in investing passively? What are you hoping to get out of it? What's going on in your life right now? Or what are your dreams that you want your life to look like? We want to hear them paint that picture for us so that we can understand, okay, this person wants to be able to quit their job and travel the world, or this person is really worried about their retirement funds running out, or this person is just in their early 20s and they're really hungry. They got a lot of time, but no capital. We want to understand their situation first before we talk to them about syndications, because it might not be the best fit for them.
So raising capital before or after the deal, when does it make sense to raise the capital? What do you need to have in place? Do you want to have the deal, or do you want to have the money first? What is the
Now, start
resolution?
now. Start now. Don't wait till you have a deal on the table. Often it's too late at that point if you haven't done the legwork of raising capital. So start now. And a lot of people are intimidated by this, but you can start with just organic conversations with
Mhm.
family and friends, just sharing with them what you know about real estate and what you're doing. Then maybe start a blog or post on social media. Just provide value, share with others what you're learning, and then you'll position yourself as a leader in the space.
What if you don't have a deal yet, though, Annie?
Well, if you don't have a deal and you get down the line with those conversations and people are super interested, then what you do is you create a sample deal. And you can do this very easily. You can sign up to receive other people's investment summaries and talk to them about their deals and see how they're doing it and sort of structure yours based on theirs. Or you can even go to LoopNet, find an offering memorandum, pull that down and create a sample deal package based on that. And then you go to your potential investors and you say, look, I don't have a deal right now, but when I do have a deal, it's going to look a lot like this example. Let me walk you through this example. And what that does is, through you walking them through that sample deal, you get to hear the exact questions that they're going to have and the objections that they have. And you'll be able to help address those questions and those objections before you have a live deal on the table. Because once you have that deal on the table, the time is ticking and you don't have a lot of time to answer all of their questions.
Yeah, it can be very challenging to raise the capital or to come up with creative sources at that point. Fortunately, we have had some of those creative resources here at Bakerson, and we've been able to take down some properties, and now we're actually raising capital for the deals after the fact. But don't find yourself in that situation. Definitely have all of the investors lined up, primed, ready, have them understand what your philosophy is, who you are, what your investment looks like. So that's my recommendation. So I think that's great advice. Let me ask you this, Annie. Can people find out what are the steps to raising capital on the raisingmoneyminute.com website?
The steps to raising capital, absolutely. We talk all about that. We've got the Raising Money roadmap that will walk people exactly through the steps that they should take, from defining their target audience to building their thought leadership platform, all the steps that they should be taking to effectively and safely raise capital so that you're following the guidelines and that you're getting your investors lined up before your deal is ready.
Sweet. So visit us at raisingmoneyminute.com. And just to let you know, for next week, we're going to be doing a really fun show. It's going to be about this match game, where you're trying to align with the right reality, the right things to match exactly how to phrase things to raise capital. And you may think to yourself, I don't know if I can raise capital, or I'm not sure if I have the experience. And that is a mismatch. That is creating resistance. And we're going to be working on affirmations, on things that you need to be saying to yourself, and practices that you need to implement in order to effectively raise capital. And that'll be next week. So tune in for that one. Annie,
love it. Can't wait.
It's been a lot of fun as always. Can't wait for next week, and enjoy the rest of your weekend.
Indeed. It's been a blast as always, Ruben.
Cool.
Start now.